Good afternoon. This is Tom Alexander. It is Sunday, December 19th. It is 3:30 p.m. Eastern Time in the U.S., here in beautiful Charleston, South Carolina. And this is our weekly in-depth review of the report that you have all received. Housekeeping, if you have not subscribed to the YouTube channel, please do so. If you find value in the video, please like it. Okay, so a couple of comments. We're coming into holiday time of the year. Volume tends to be light, but we've also, if you go back and look over the years, we've had some incredible moves from now into the end of the year. So that doesn't mean volatility won't be with us, and it could be up, down, or both. While volume may be low, the volatility may actually pick up. We'll see. And in keeping with that, the idea of an uptick in volatility, let's go to our charts. And we'll just start with the view of all four of the U.S. primary trading indices. These, of course, are the cash contracts. The levels I have highlighted on the charts are important as we come into the week. I'll take each index separately, starting with the SPX, the S&P. Clearly, Friday's high is important. Friday's low is important. Below Friday's low, you really don't have anything of substance from an auction market perspective until the December lows. If you get above Friday session high, that immediately restores and actually increases the probability of new all-time highs. Friday was an option expiration, so a lot of funky things can happen on option expiration that are lifted as you come into the beginning of a new quarterly auction, which we will begin on Monday. Okay, the NDX. The NDX now actually showed relative strength on Friday, but from a structural perspective is showing relative weakness versus the S&P, the ES. You can see we took out, on Friday, we took out the prior week's lows, but it also bungee jumped back and closed near the midpoint of the day's range. Below Friday's low in the NDX, the next level is down here at the December lows. And below there, you're increasingly in an elevator shaft. Okay, looking at the Dow showed relative weakness into the double top in the S&P. Friday, wide range down day. You really need to regain Friday's high to reestablish the probability of a bullish outlook into the end of the year. The Dow is sitting on the edge of the abyss from an auction market perspective. You've got this huge elevator shaft that goes all the way down to the December lows. And of course, the Russell. Now, the Russell has tested this level about 8 times, literally. I think it's 8 times. 1, 2, 3, 4, 5, 6. Let's could count this as a test, but certainly 7 and 8, this area. And really the Russell acted the best of all four of the indices on Friday. It dipped down and then immediately bungee jumped back after running the stops just below the low of the 15th. So as we come into Monday, I'm trying to maintain, from a trading perspective, a neutral bias. I do think that we're going to move sharply and that we are very likely to test either upper or lower extremes, or potentially both, by the end of the week. Certainly the next 2 weeks, you're going to see a move above and into new all-time highs by one or more of the indices, or you're going to see these December lows taken out by one or more of the indices. Okay, let's take a look at the profile view, as we always do, see if it gives us a different perspective. I landed on the NDX. We'll talk about the NDX. Pretty clear the December lows are important, and that below the December lows, there's not a whole lot of volume on the horizontal scale, which from an auction market perspective can provide and is a logical area to perhaps look for some sort of either support or resistance, depending on which way the market is moving. There is a little volume node not too far below this level. And let's see, yes, well, here's the Dow. And we'll split it out. And really below this level, you're looking at the December lows. You need to reestablish and regain and close above Friday's highs to reestablish a bullish outlook. S&P, very similar. You need to reestablish Friday's high to increase, actually, to if we were to close above Friday's high, it would shift the probabilities towards new all-time highs before anything significant to the downside. However, if we do start to accelerate lower, this is the next objectively identifiable level down here is 55.12, 44.92 area. And then, of course, the Russell. And it's actually this area around 2210. This was Thursday's high. I guess this was, what was this? Friday or Monday's high. But this area right here, the ES needs to close above this area. If it does, that could be at least short-term very, very bullish. A close below Friday's low, it could be very, very bearish. The Russell is in an area that it should move very sharply away from. It should move sharply away from this low. Now, it may be in the process of moving sharply higher. We shall see. We'll get a hint in Globex. Okay, let's take a look at the technical, the internal perspective of this thing. And breadth is at a level, it can break either way. It's neutral. You know, it really didn't, we had a pretty significant decline over 2 days from high to low. And breadth, again, you know, it got a little more negative than this intraday, but not that much. So breadth is neutral and can break either way. So guys, right now, my position is pretty much the same as you can see on this chart. We're dead in the middle. We're really in the middle of two critical intermediate term key reference areas. There's no reason to make a huge bet here until you can see which way the market tips its hand. We don't have the overhang of a huge quarterly option expiration like we had coming into this past week, and in particular into Friday. So that pressure is off the market. So we'll see which way they take it early in the week. If I need to update, I will. I will be around all week. I was going to go out of town, but that trip has been canceled. So I'll be around into Christmas. So you guys have a great evening, and I will speak with you soon.